Hi everyone, welcome back to our channel. In today's video we're gonna have a look at euro dollar and I'm gonna share with you what my thoughts are and what I expect for this week ahead. Alright, now for those of you that are new to this channel, make sure to check out the links in the description below this video and definitely join our free Telegram channel where I share a lot more free content, trading setups and ideas as well. Also, don't forget to subscribe to this channel because I'm going to be dropping more videos, more video analysis on gold and other instruments from my watch list as well. So if you don't want to miss that, therefore to miss some great opportunities in the market, definitely hit that subscribe button and also leave a comment below this video and let me know if you like those videos and are they actually helpful. So without further ado, let's carry on with this one. And since it is Monday today, I'm going to have a look at the economic calendar and we'll see what news we've got ahead for this week. Now, this one, compared to the previous week, is quite easy, quite chill. We don't really have that many high impact events, apart from what we see here on Wednesday, where we've got the CPI for the US dollar. Now, for those of you that are swing traders trading on the hourly time frame or anything above that, there's nothing to worry about. This is not normally an event that is capable of reversing a whole move, but if you are a scalper or maybe a day trader, looking at the 5 to 15 minute time frames, then you could actually expect some big moves happening across the price chart on all US dollar related pairs. We've also got GDP coming out for the British pound on Thursday, and that's what we need to be aware of as well. But other than that, like I said, looks like it's going to be a calm week. So let's head over to the chart. This is the euro dollar. I'm actually going to start off from the higher time frames, and I'm going to start off from the weekly time frame. In fact, when you analyze an instrument from your watch list, that's what I always suggest to traders, is to do a top-down analysis. Start from the monthly, weekly, daily, 4-hour time frames, and then get to the time frame where you're eventually going to make your entry. Now, looking at the weekly time frame, what we see here is that price has been pushing down for quite some time now, right? And it's currently testing a strong support. Now, for those of you that are still beginners, new to trading, or if you haven't traded euro dollar at such a low levels, the first thing I want to say is that price can definitely continue even lower, right? A lot of people are saying that the market is already too low and it's about time to reverse, but that's not the case, and you shouldn't be thinking like that, because while the market is pushing down, we're only looking for short trades, right? And there's no point, and it's also quite risky to look for trades in the opposite direction. So what I'm going to do now is I'm going to drop down to the daily time frame, and you can clearly see that well-defined downtrend that we have here on the daily time frame. So I'm going to drop down to the 4-hour chart, and you can see that even better. We've got the the lower highs, the lower lows as well. We've got the pullbacks, and price is still pushing down. So looking at the 4-hour time frame here, you can see that descending trend line is placed right across those last two impulses, where we've got the push down, we've got the pullback, lower high, then we've got another push down, we've got the lower low, and price is currently into a retracement or a pullback, whatever you want to call it. So what I'm going to be looking for is obviously a continuation down, but I need to find my entry levels. Now, I already know what the direction is and what trades I should be looking for, in this case short trades, but now I also need to find the best entry levels, my stop loss and my take profit as well. And that's why I'm going to drop down to the hourly time frame, and I'm going to be looking for some key levels, stop loss, take profit, and so on. So looking at this right here, pretty much a consolidation where I'm expecting for price to break below the support and continue even lower. All right, so looking at a suitable stop loss level in this case, well, that would be either above this previous high or this one here. If I have to be honest, I would consider this one a risky stop loss, an aggressive stop loss, and that's exactly why I would actually place my stop loss above 1.0640. All right, so you can see that this is that last high, and if I have to be honest, looking at the 4-hour time frame, if in price pulls back and it takes me out because my stop loss is just above that high, if it takes me out, well, if I have to be honest, that doesn't mean, the trend will have reversed, because that's not the case. We've also got this key level up here. So we can actually get taken out here and price can then turn around and again continue pushing to the downside. But obviously, looking at current price levels, we can't really place our stop loss all the way up here. So back to the hourly time frame, I think this is probably the best place for our stop loss considering where price currently is. All right, so what I'm going to be looking for is for price to make a little bit of a pullback right around 1.0550. I'm going to place my stop loss just above 1.0640, excuse me. I'm going to make my entry here, and then I'm going to be looking for price to continue to the downside. All right, when it comes to target levels, obviously this is not going to be our target, okay, because we're definitely expecting for price to break below that and continue lower. So what we need to do next is to find the next support levels below current price levels, right? So that would be 1.04 and 1.03 as well, which are also psychological numbers, and it just makes a lot of sense. But also, for those of you that have been following me, my YouTube channel or my free Telegram channel, or maybe for those of you who joined our mentorship program, we also like to use other instruments, and one of those instruments is the Fibonacci expansion tool right here. So we place that across point A, point B, point C right here, the end of the pullback, and that way we can find out the next target levels. And the first one here in this case would be 1.0350. So that's where I would actually place my take profit. And looking at what we've got now, we've got an entry around 1.0550. Well, hopefully, that's definitely not certain, but it would be great if we do see such a pullback. We've got our entry around 1.0550. We've got our stop loss just above 1.0640, and we've got our take profit down at 1.0350. So that's about 200 pips of potential target, with about just shy of 100 pips of stop loss. So that means just over 1 to 2 risk to reward ratio on this setup, which is not bad at all. Now, to me, that's probably the best way to trade this setup. But for those of you that are a little bit more aggressive, what you can do as well is obviously you can wait for price to make that pullback. All right, you can then wait for rejection here, let's say a long wick to the upside, maybe an engulfing candle or anything like this, some type of a candlestick pattern that gives you a signal that price doesn't have enough strength to continue higher, but it will in fact reverse and continue lower in the trend direction. Then you can place your stop loss just above that reversal, which, like I said, it's a more aggressive way to place your stop loss. But that also means if you do get stopped out and then price reverses at a higher levels, then you need to make a second entry. All right, that's the risk of it. But other than that, you will create for yourself a much better risk to reward ratio, and therefore you can actually make more profit because you're going to be using the same target but with tighter stop loss. All right, meaning that you're going to save some pips from the stop loss and add them to your target. Okay, and another way to enter this trade would be a little bit more conservative and not that preferable, just because it is not going to give us such a good risk to reward ratio. But let's say we wait for price to break below that support. All right, it comes back for a retest, then we make our entry here. We can use about 30-40 pips of stop loss just above that retest, and then we look for that continuation down. Now, although this is not preferable, it might be the case for this setup because recently what we've seen is that price doesn't, give us the pullbacks that we want to see, but instead of that, it's moving quite hectic and it creates big impulses. So that's exactly what I'm saying. We might not see that pullback, but instead of that, we could see price breaking below its support straight away. So that's when we're going to be waiting for, that retest and continuation down. And obviously we don't enter on the retest straight away. We want to see signs of rejection. All right, whether it be an engulfing candle, dojis, pin bars, whatever it is, we want to see that price is testing that level and it finds resistance up here, and that's when we make our entry to the downside. Okay, so hopefully that makes sense. Like I said, leave a comment below this video and let me know what do you think of this setup. Do you currently have any trades on euro dollar, and what other instruments you also trade in the forex market? Alright, also subscribe to this channel so you don't miss out the other videos that I'm about to drop until the end of this week, and also every other week as well. And like I said, join our free Telegram channel. You're gonna find a lot of valuable content, a lot of free information, trading setups, trading ideas, and pretty much just free knowledge right here. Okay, that's all from me now. I'll see you guys in the next one. Thanks for watching. Please don't forget to watch our last 2 videos where you can find more valuable information. Check out our channel for more trading related videos. I wish you all a successful trading, and I'll see you next time.